Nicolai, I want to go to the success of your show and obviously the classic painting, The Scream. It seems everyone now is screaming. How did you do 14% blended and not scream this year?
Well, I wouldn't say we're screening, but we are pleased with the results. The fund was up 14.5% last year, and in absolute numbers, it's the second best year we ever had in a 25-year history.
I want to talk to you and quiz you closely on the uproar right now on the value of ESG investing. You've had a number of companies that you stepped aside from, and in 9,000 holdings, you say, we're not going to mention who they are, blah, blah, blah. I want you to give us a primer now on the plus, the minus, the pros and cons of ESG.
Well, it's clearly a plus. And, perhaps in the old days, there was a bit of a trade-off between, ESG and returns. Now, I really think they go hand in hand. The thing is, if you own a company now which is not sustainable, doesn't have a sustainable business model, not only will you not get finance, you'll not get insurance, nobody will want to work with you, and you will have no clients. So it just really goes together to a degree we haven't seen before.
Tell me about a Sharpe ratio analysis of what you do. You are the aircraft carrier. You can barely move the needle with any individual stock or even sector selection as well. In the ferment we're in, including what we saw from the American Central Bank yesterday, how do you find alpha? How do you find a Sharpe ratio return that's constructive?
Well, you're absolutely right. We are a very large fund, and so there aren't that many places we can hide, and we are quite index near in what we do. But at the same time, there are a lot of smaller tweaks we can do in terms of
Give us an example. Give us an example.
Well, there are companies we can choose not to own. For instance, Wirecard in Germany, we did not own that when it collapsed. It saved us, a huge amount of money. So we can do this negative selection, which has been good for us over the years. So we do have some means. Actually, last year we had excess returns of 0.75%, which was like 80 billion Norwegian kroner. So we can do things, even though we are index near.
Yeah. Lisa, what he just said there is absolutely fundamental to the mathematics of management. It's not what you do. It's what you don't do that adds alpha.
What you don't buy. And we were talking about ESG and how you're moving into ESG. And I just want to sit on that for a minute, Nicolai, because I know your fund has been really forward on this at a time when oil is outperforming. And we see that this transition has been incredibly difficult. And in an era of inflation, it is the energy stocks that are doing the best. How do you arrange around that?
Well, we own the big integrated oil companies, and there are two ways of kind of navigating this territory. You can either sell out of the companies and just run away from the problems, or you can stay in the companies and be a constructive and long-term shareholder and actually help the transition, and that is what we are doing. So we are there. We got clear expectation when it comes to how we want these companies to behave and to do their business, and we own them, and we have made money in this sector.
Nicolai, can you add to that portfolio holding in tandem with your expectation that oil will continue to rally, or does that go against sort of the fundamental ethos of the fund?
No, there is no contradiction here. We can own the integrated oil companies. We think they have a very, very important part to play in the green transition. Indeed, it's interesting when you look at the various ways that they do this. They're really on top of this technology and very, very important players. So we really want to be the owner here.
Nicolai, at a time of such great inflation, you've come out and you've talked about how you expect returns to be a lot lower in the years to come. How much lower, and what are you doing to offset some of the obligations that you're going to have to cover with the returns that you previously enjoyed but are not going to be getting?
Yeah, well, first of all, we are a very, very long-term owner, right? We have an investment horizon of 30 to 100 years. So we are looking at this in the long term. But it's clear that we are now starting at a point where interest rates are extremely low. Markets are very, very high. Inflation is rampant across the world, across sectors and so on. So this is not a great starting point. So therefore, we do tell people and the Norwegian people that they should expect lower returns going forward.
I want to ask two more questions, Nicolai, one off script, but you just mentioned the word rampant, which the Financial Times headlines today is rampant inflation. Do you have an optimism that inflation will come in as we move on from the pandemic and we get our supply and demand dynamics globally straightened out?
No, I think it will remain high for a long time.
One more question, if I may, and this goes to your philanthropy. You're the largest collector of Nordic art essentially in the world. With your vast wealth that you've garnered, you do have what I'm going to call a Norwegian and Scandinavian perspective. Nicolai, you have a 120-some-mile border with Russia and Norway, and of course, all eyes are to the east in Finland. What should be the Scandinavian response to the new Russia?
Well, hey, that's a tough question. I think that's beyond my level of expertise. I think you should ask, the people in NATO about that, and not me.